it's a bull trap. And I know there's so much excitement out there, but I do caution investors. And I've been through many bull markets and bear markets and bull traps and bear traps. So this is always the hardest, right? Because, picking bottoms is hard enough to what price is it going to, but then time frames. And all I can do for myself is say, I think that regulation will be out in the next 6 months. So I think that is going to give us some clarity. And Bitcoin does bottom in 2023 here. And I do think that there will be, again, it's very high risk, but a small amount of capital can be maybe put into Bitcoin somewhere in the range of that. And again, I always tell people that in bear markets will generally go down more than you think. So, when I'm talking about these levels on some of these charts, a lot of people probably are thinking, oh, that's crazy. It was a tough year. There's no doubt about it. It was a year where we had to start paying for our past expenses, meaning that the Federal Reserve was on a money printing frenzy, which gave us so much extra money in the economy, in the markets. And now was a time where we had to kind of pay the piper. So I think again, it's to understand that much wealth and that much kind of over expenditure comes at a cost. And I think 2022 was showing us that at this point, we have to tighten our waists. It's going to be a little tougher going forward without the Fed printing all this money. Yeah, so I'm more in the camp of it's a bull trap. And I know there's so much excitement out there, but I do caution investors. And I've been through many bull markets and bear markets and bull traps and bear traps, that this has the hallmark of making a bear trap or bull trap. And I say that because, number one, it was a great rally. But notice where we stalled as of now. This was the beginning of the FTX collapse. And so on a technical basis, this is huge resistance, and we're only back to that point. And I know it seems like a great move. We went from 16,000 and change right up to 21 and change. But if you zoom out on the charts, look at the tiny nature of that bounce. And so to get over exuberant in terms of believing it's a new bull market, I think you have to take a little bit of time here to just see how it trades in the next couple weeks, if you will. So I'm personally in the camp that I think that this is a risk-on environment in January of the new year. I think people think new year, new crypto, new year, stocks can go higher. And I think that's creating a lot of these buyers and short squeezes in these stocks. We've seen GameStop, AMC, Bed Bath Beyond rip higher, like 50, 100% moves, very reminiscent of the Wall Street bets runs that they saw in 2021 as well. So I don't see a fundamental shift yet in the underlying key parts to the crypto market or the stock market. And that makes me concerned that, again, it could be a bull trap. So in terms for me, I'm looking at it more like this is a push to sell some of my longs into in crypto versus accumulating and buying, thinking we're going to be at all-time highs in the next, couple months. Since 2009, which is when the Fed started printing, and by the way, when Bitcoin came into existence, everyone kept on saying, don't fight the Fed. The Fed's printing money, right? So now all of a sudden they stop printing money, markets go down, which is what you would expect. But now people are trying to fight the Fed and saying, well, there's a bottom in, we're going to go back to all-time highs. And so you really have to use the same logic as pre-2022 versus, after 2022. If it wasn't to fight the Fed when they were printing money, well, if they're sucking money out, we shouldn't be trying to fight the Fed as well. So this is always the hardest, right? Because, picking bottoms is hard enough to what price is it going to, but then time frames. And all I can do for myself is say, I think that regulation will be out in the next 6 months. So I think that is going to give us some clarity in terms of, what projects are good projects. Can we see audits on these projects, on these exchanges? That's going to give confidence to investors. And then also looking back, and I look back and I say, okay, well, if FTX was the Lehman Brothers of crypto, and obviously Lehman Brothers occurred in 2008 where that big bank failed and created a kind of a panic in the banking and in the stock market. It took about 6 months for the markets to bottom back in 2008 into 2009, and it dropped the markets about 45%. So if you look at that from where that news came out, it puts us right around 10,000 or 9,000 on Bitcoin, and it tells us maybe May or June as a potential bottom. And obviously, it's so hard to figure out, especially on an asset as young as Bitcoin. But that's kind of what I'm leaning towards. I'm leaning for a bottom this year, probably in the second quarter of 2023. And then ultimately, I think the regulation will turn out to be an amazingly positive thing for Bitcoin in the second half of the year going into 2024 and the halving. So for me, I'm looking back at this M top, right? So this M top here, we obviously have seen selling here. For me to really get bullish, I would want to see us take out this level right here. So this is obviously what we came down to here. Then we hit it here and we finally broke through. If we could reclaim that level, then I think you have to say we're now closer to the all-time highs than the lows on Bitcoin, and you probably get a pretty successful continuation move back to the highs on Bitcoin around 69,000. So that to me is a real line in the sand. I think in the near term, if you're just watching for momentum, the FTX high psychologically is a big level. As we can see, it's struggling at that level now, but that wouldn't, if we broke above it, that wouldn't make me think, okay, we're now in a bull market. It would just be, okay, that's a good sign of strength for Bitcoin. This upper level would change my mind. If we can get above there and establish ourselves, that would be really impressive. The S&P 500, I am concerned, and I think the first half of the year may be a little bit better than the second half. I know a lot of people had said the first half would be worse and the second half would be better, but I'm leaning towards the first half seeing a lot of chop as the Fed kind of starts to say, okay, we're going to stop our tightening phase, but we're going to stay at neutral. So just that alone will give the market some relief rally. But then I do worry that in the second half of the year of 2023, we're going to see a recession hit. And the problem with a recession is, number one, every economy has to go through them every so often. The issue now is that inflation will likely remain elevated, not at 6%, not at 8%, not at 10%, but at 3 or 4%. And that's going to make it very hard for the Fed to come out and stimulate. Even lowering rates is going to be tricky because they're going to be very concerned that by lowering rates, it then creates more money supply and we're going to see inflation roar back. So if we get into a recession and the Fed doesn't come to the rescue like they've done since 2009, that to me is a reckoning for the stock market that we're gonna have to face. And to me, that means lower equity prices by a significant margin, because we could be looking at a long-term recession that lasts for multiple years, like 3 to 5 years. It may not be a horrendous like Great Depression, but I could just see this economy getting to a point where it's just kind of recession, minor recession, but for like a long period. And that's kind of a scary thing for investors to think that Apple and these other companies may not be able to earn significantly more money on a yearly basis year over year. Just like in 2021, late 2021, I said that gold would be the best performing asset if you compared it to the S&P as well as Bitcoin. And it was down slightly on the year, but not by much. This year, it's already had a big rally. I'm predicting that this is the year that we will see a breakout of this bullish channel here. So upward move, consolidation for a couple of years. I finally think we break out of this 2000-ish range, and I think we will get a move up. Again, how high will that move go on gold is tough to know. But if you think about it, the stars are finally aligning for gold, because you have, number one, the Fed's going to be done raising rates, which was one of the negatives for gold, because the raising of rates made the dollar strengthen. And so if the dollar kind of is done going up and maybe starting to weaken a little bit, that's really bullish. In addition, if inflation stays elevated, let's say 3 or 4% per year, that's also a very bullish thing for gold. So I think you're coming into the sweet spot for gold. The consolidation is a beautiful bullish consolidation, but we do need to break out above this 2000-ish area to really see the big move up occur. Silver does also have that bullish consolidation pattern, right? So you do have that bullish consolidation pattern on silver. Notice how it's attacking this down sloping trend line. If it can break out, you should get significant upside. The only issue, and again, this is only a minor issue, I'm still a bull on silver as well, but just remember that silver is also an industrial metal. So in essence, if we go into a big global recession, the demand for silver, at least for industrial purposes, could drop a little bit, while the supply for safety, or the demand for safety, would then elevate. So I think that, again, gold is your pure play. Silver would be, yes, if the economy can stick in there and still be okay, then I think silver would outperform gold as well. Longer term investors for me, I mean, so there's a few places you can hide. It's gold, silver, those would be some places to kind of allocate a little bit of capital. And then I think what you want to do is you want to start kind of keeping your eyes open for stocks that have been really beaten down and looking for levels that they haven't seen, like good quality names that you haven't seen in a long, long time. So for me, it's about having that dry powder on the sidelines. Right now, I'm bearish on Apple, and I'll show you why. So you have this longer term trend line here. It broke. We're retracing to resistance now. My expectation is it goes down. But I think once you get down to this gap fill around 93 to 94, and if it trades down to 81, and I know those numbers are scary, but that's where you want to start to accumulate. You don't want to be jumping in at these levels ahead of a potential recession. Let the panic, let the fear come in, drive prices down of good quality stocks. Bitcoin does bottom in 2023 here. And I do think that there will be, again, it's very high risk, but a small amount of capital can be maybe put into Bitcoin somewhere in the range of that 10,000-ish area for a longer term play as well. And again, I always tell people that in bear markets will generally go down more than you think. So, when I'm talking about these levels on some of these charts, a lot of people probably are thinking, oh, that's crazy. But a great thing to do is go back to past cycles, right? If you go back to 2008, 2009, did anyone think the bank stocks were going to be penny stocks before they roared back? And the answer is no, none of us did. And so always remember it can get worse. And the best thing about it is to have money on the sidelines ready to invest. I mean, if you were buying banks at those levels back then, the amount of money you made is unbelievable.